Hello, everyone. Welcome back to another weekend edition of our price action based technical analysis series. Today, we are taking another look at the XAUUSD chart, where we saw gold make a comeback last Friday and ended the week on a positive note, despite hints that the Fed might keep interest rate higher for longer. Last week's trading setup gave us a chance to ride the bullish momentum that started early in the week, and for educational purposes, if you missed out on our daily commentaries from last week, you can catch up with the link in the description box below or in the top right hand corner of your screen if you are watching on my YouTube channel. Now, before we jump into today's analysis, it's important to know that the Fed isn't quite convinced that inflation is hitting their target yet. They want to see more data over the next couple of months to decide if January's inflation numbers were just a blip or if there is a bigger issue at play. Now, this could mean that holding on to gold might get pricier, as the Fed seems to be leaning towards keeping interest rate high for longer. So how might this affect the market dynamics next week? As always, we will be looking at the current market structure from both technical and fundamental perspective using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to figure out where price might be headed. Just a quick reminder, this video is for educational purposes only and not financial advice. While we are here to help you understand price action analysis better, always remember Forex trading involves inherent risk, so exercise caution and consider consulting a professional financial advisor before making any investment decisions. Now that we've covered the basics, let's get into the nitty-gritty without delay. So our first point of contact today, as always, is going to be on the daily time frame. And for those of you who have been with me for a while now, this you will be familiar with the structure, as we still have the same character in price action after considering the nature of trading activity since the month of August of last year. And after taking this historical data into consideration, it is quite clear that the market has been very bullish. And after connecting the series of higher lows, we have this ascending trend line, which of course has supported that uptrend move. Now, besides this, the only thing that changed here is the key level, which of course, remember last week key level was around the 1,985, which later turned out to be a platform for buying opportunities last week, and gladly we took advantage of that opportunity. Now, going into the new week, the key levels have actually changed, and right now we will be using the $2,025 level as a yardstick to guide our trading decisions for this week. And of course, if you look at the structure closely, you will see how it had played a major role in determining the direction of price action since the month of November of last year. And of course, you know how we use our key levels in this community. As long as price action remains above the key level, we obviously want to be looking out for patterns and structures that support the idea of buying, and not until the key level is broken to the downside with continued selling pressure can we start considering selling this asset. Now, as we head into the new week, the question we should be asking at this point is, will price maintain the momentum above the key level in such a way that it will break out of that descending trend line here to incite more buying opportunities in this market, or are we likely going to see price drop back below the key level where continued selling pressure could lead to the breakdown of that ascending trend line for the first time in the last 4 to 5 months. You would agree with me at this juncture that we are at a crucial juncture where, depending on how market participants will react to the structure, will determine if we are buying or selling this week. Now, to make things easier for us to strategically position ourselves for the next move, have been able to identify a simple trading setup on the 4 hours time frame. But before we delve into the 4 hours time frame, it's important that we keep tabs with the fundamental factors that is likely going to be affecting the market sentiment in the coming week. By monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, based on the asset we are looking at for this week, we shall be focusing on features from the US economic calendar. And if we take a closer look at this events for this week, you will see that we have a handful of them, where the first high impactful event for the week is coming in on Wednesday, February 28th, and that is the gross domestic product annualized for quarter 4. This is one key economic indicator that everyone is looking forward to, and of course it represents the annualized percentage change in the US real GDP during the fourth quarter. Now, anticipation of this event can significantly impact market sentiment as it provides a comprehensive view of economic health and growth. And considering the major confluence we have, which we discussed earlier on the daily time frame, we want to see how the market is going to react to the structure, giving us a clue of how market participants will be anticipating this event. Then fast forward to Thursday, February 29, we have the core personal consumption expenditure price index, a data that measures the average change over time in the prices paid by consumers for goods and services in the last 1 month. Then finally on Friday, March 1st, we are looking at the ISM manufacturing PMI, which is a leading economic indicator in the United States, measuring the health of the manufacturing sector by surveying purchasing managers on various business activities. So these are the high impactful events we will be looking forward to this week. And of course, as technical traders, we understand that the anticipation of this event has a way of influencing the market sentiment, which obviously will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, where I told you earlier I have a simple setup to guide our trading decisions for this week. Now, what I did on the 4 hours time frame was to consider the nature of price action since the month of February began. Now, if you look at the structure closely, you will see that the first half of the month of February was more of price action, finding lower lows and lower highs, resulting in this descending trend line you see here. Now, during the second half of the month, we saw that following the CPI data that incited a positive traction in favor of the US dollar, we saw that as soon as price tested that 1,985 level, which was our key level for last week, we begin to see new resurgence of buying activity in this market, leading to the breakout of that descending trend line, which from a technical standpoint is considered as a significant signal informing us that buyers may likely be taking over this market. Now, in order to guide our trading decisions for next week, we have an ascending trend line to work with, and as you will see, after connecting the series of higher lows in the last couple of weeks. We have the structure marked out, and we know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying, and not unless this ascending trend line is breached and broken to the downside can we start considering selling this asset. So at this point in time, what we are going to be doing now is to see how market participants will be reacting to the structures and level. How we're going to see price retrace back into the ascending trend line and that key level at the $2,025 area to incite a bullish momentum. That is one perspective to this. Or how we're going to see price drop, breaking down both the key level and the ascending trend line to incite a sell-off, maybe back into the 1,985, which shares a confluence with that descending trend line we identified earlier. And thirdly, how we're going to see price action break out of the $2,040 area to incite another wave of bullish momentum. So you will see and agree with me that we are at a crucial juncture in this market where, depending on how market participants react to the structure at the beginning of the week, will be giving us an idea into what we will be doing. But trust me, I will be with you in the comment section of this video to give you an update after monitoring how participants in this market will be reacting to the structure. If you've in any way found this content helpful and useful in making your independent trading decisions for the new week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.